Hey everybody, welcome to the meetup tonight. And I'm glad to have everybody here. My name is Bobby Jones. I'm the host. And so tonight we're just going to be talking apartments, talking real estate. So we've got some newcomers and we've got some folks with some experience in the room. So looking forward to answering any questions and going over any topics that anybody's interested in. I do like to have people kind of introduce themselves, that we all kind of know a little bit about each other. So I live in Winston-Salem, North Carolina. I have 3 kids, and life's been a little bit crazy to start this year off, but we're getting through it. So let's see. I'll start with let's go with Don here. And since he's essentially my co-host tonight, which is kind of cool. So, but go ahead, Don.
Hey, so thanks, Bobby. So my name is Don Spafford. I'm in Idaho Falls, Idaho. Probably a place you've never heard of. It's on eastern side of Idaho, near Yellowstone Park. I guess I don't know. I'd say I consider myself moderately experienced, but I've been investing in real estate for about 4.5 years or so. My wife's been a realtor for about 10 years, though. We started buying fourplexes, and then after a few, started scaling into more commercial avenue. Just things, just kind of chain of events. Things came about, and opportunities arised, and I got some development deals, some commercial retail developments in Arkansas, and then a large multifamily development here in Idaho Falls. And more recently, I got involved with a group that. This is something a little bit different in real estate that most people haven't heard of. We purchase RV campgrounds and resorts, and provide higher returns to our investors for that.
So, all right, man. And next we'll go with Charlie.
Hey, my name's Charlie. I live in South Carolina. I was actually new to the 1099 world, and I was able to finally start self-directing my 401k. And I was looking to finally branch out other than just straight equities and stocks.
Cool, man. Where do you live?
Myrtle Beach,
you said South Carolina. That's right. So very cool. Very cool. Let's see. Kimberly, you're up next.
Hi, my name is Kimberly. I live in Winston-Salem. I do not have no experience in none of real estate or nothing. I just moved to the United States, and I'm really interested in, getting to know these options because, as I said, I'm really in zeros and I'm open to learn.
Very cool. Very cool. Glad to have you here.
Thank
Lynn,
you.
Yeah. And let's see, Lynn, you're up next.
Yep. Hey, everyone. Can you hear me? Okay, perfect. I live in Rexall, by Charlotte, North Carolina.
Oh, okay.
And no experience whatsoever. So, really starting this venture, happy to learn. And so happy to be here.
Very cool. Glad to have you. And Barbara, you're last up.
Okay. Hi, everybody. I'm Barbara Wirtz. Excuse me. I'm a certified registered nurse anesthesiologist, and just getting into real estate investing over the past year. I calculated yesterday that I have now become a limited partner in, I think, 4 or 5 deals, and have 1,299 doors in my allocation. So I've been investing usually Class A on these particular real estate deals out of my solo 401k. So I do 1099 CRNA gigs. Right now I'm in California working. So I'm looking to capitalize into Class B limited partnership, and eventually general partner at some point, maybe 2023 would be the earliest that I could do that. But I'm also looking Don, I'd be interested in finding out more about the RV and campground limited partners as well. So my business is out of Tampa, Florida. However, all my furniture is in Albuquerque, New Mexico right now, and I work in California. So kind of fun.
Yeah, sounds like it.
That's a little bit about me. So looking forward to finding out more tonight. So thanks, Bobby.
Very
I just
cool.
want to say, I think that's cool. She pointed out she has $12.99 doors, just sit around up to 1,300, you know.
Yeah, exactly. Very specific.
Yes, being precise is important, especially in pediatrics. So
yeah, absolutely.
Yeah.
So, and Charlie, you said you're into the 1099 world too. Are you a nurse anesthetist as well, or are you doing some other work?
Yes, I'm a nurse anesthetist as well.
Okay, great. So, and then Kimberly and Lynn, I know you guys are both kind of here in the North Carolina markets. What do you guys do for a living?
I'm in the banking industry.
Cool.
And I work for the school system.
Okay. Very cool. So yeah, just depending on where you're at and the kind of income you're making, that's going to make a difference in kind of how you enter into apartment investing. So if you have a lot of liquid capital, then you're able to kind of dive into some of these bigger deals and treat it more as a passive investment. But it's something where you have to either be bringing money, knowledge, or some kind of hustle. You got to be bringing some energy to the table. You got to bring 2 out of those 3 to any kind of deal or offering. So, if you want to be a part of something, you got to be able to work and have some knowledge about it, or you have to have some money and some knowledge about it. You can kind of combine them as you will, but for those who don't have the capital, you definitely have to put some work in to become more of an active part on some of these apartment deals. And, it might be like Don said, starting off with, some 4plexes and stuff like that, smaller multifamily to kind of build up a portfolio. But, real estate, you're not going to get wealthy fast. It is, something where you kind of buy real estate and watch it grow in value over time. But it can give you a very stable, sense of growth in your portfolio. If anybody has any specific questions, some stuff that you'd like to know, I know we've got a couple of real newcomers in here. What is it that you came wanting to learn about this evening? What can I help you guys with?
So for me, hey, this is Lynn speaking. For me, it's really, I'm very, very novice to this, and to be honest, so, just, I guess, interested in hearing a bit about, how some of y'all have started, entered the market. You just mentioned, capital and some of the, I guess, baseline requirements. So, even, how much, did you start with, and, what are some of the options? Obviously, I know I do have a long way to go, and there's a lot of, due diligence that I have to do on my own too. But I thought, this would be a good avenue for me to, at least, start hearing a bit more, and then, going back and doing my own research and things like that.
Sure. Well, I think the thing about it is it's all about the teamwork and the people that you're bringing to the table. So you have to have people who are experts in certain parts of the structure that you're looking at. So if you're talking about investing in very small multifamily, like 3plexes from 4plexes, then you're going to have to find a lot of these deals on your own. The way that I got started was not that way, because what I did was I took a lot of my retirement account and I took the money out and put it into multifamily offerings as a passive investor first. And so the difference with that is that it takes capital to do that. So a lot of multifamily deals require a minimum of $50,000 to get into, and that is a lot for many people. So, but that does not mean that only people who have that kind of capital are the people who are getting into these syndications, because you have a lot of people who are more on the operations team of that. They're either going out and they're finding the deals, or they're doing the underwriting for the deals and looking at the numbers, or they're managing the operations of whatever business plan has been decided upon. So there are a lot of different areas that you can enter into. You can enter into that asset management side. You can enter into, what I do personally is I bring capital to the table for deals. And that's how I get myself and my investors into different offerings, is because I'm coming to the table as a capital raiser for a deal, because many of the larger apartment deals take a lot of capital to take down. So I hope that gives you a little bit of a start. And I'd love, if somebody else wanted to hop in. Don, I know you've got some experience in this field. You got started a lot differently from me.
Yeah, well, I don't know about a lot differently. I didn't go direct into the syndication stuff, but
yeah,
but for me, like when I started out, we probably first started looking into real estate again about 10 years ago. But when my wife became a realtor about 10 years ago, at the time we lived in Omaha, Nebraska, and so roughly about 2010 or so. The houses, of course, the properties were way cheap at that time compared to now. Just coming out of that kind of at the bottom of that recession phase, and some of our first clients were investors, and they were buying properties there. Pretty much buy them at the time. They were doing what's called the BRRRR strategy, which you buy it, you fix it up, rent it, then refinance it. But these guys all had money. They were leveraging cash from their businesses or whatever. I didn't have any of that. We didn't have any savings at all. We were basically poor. The only savings, quote unquote, I had was in my 401k. So I was the whole time thinking, okay, how can we possibly do this? There's no way we ever save up enough for 20% down on whatever, But over time, I got more educated, and eventually moved here to Idaho in 2015. And I went to a local, seminar thing on real estate, house flipping stuff. Somebody there was talking about bigger pockets, so that's where I learned about bigger pockets. Got on there, started doing some more education and learning, and started using their analyzers to figure out how to know if a deal's good or bad or whatever. And then along the way, I still didn't have enough for a down payment. I was still never gonna be able to save up enough. But I discovered there was through just bringing on those active in the forums and talking to people on bigger pockets and stuff. I discovered there's a local lender in my area that does 10% down payments on investment properties. So I was like, okay, that would help quite a bit. And then also kind of like Bobby, I actually leveraged my retirement account. I borrowed from my 401k. I didn't do it with a withdrawal, did not pay all the fees and stuff, but I borrowed the most of that down payment from my 401k to put on this property. After again, I analyzed probably 100 properties by this point, and I found this fourplex one day on Craigslist, and the numbers worked. Looked like a great opportunity. I knew I was motivated to get started, and this was a great deal for what I could tell at the time. So I took the risk, to take that money from 401k, put it into this for the down payment. And I decided to self-manage it, just mainly so I could learn the process myself and get used to it before just handing it over to somebody else and not know if they're doing a good job or not. But I actually still manage that one now, almost 5 years later, because it doesn't really take any time at all. I've got great tenants, and hasn't been a problem. But yeah, so that was really how I first got started. Just going from pretty much no savings. Basically, we were literally in pretty massive debt at the time. And didn't really see a way out, but I saw this as our opportunity as a way to create additional income to help offset all that and build wealth for the future. And so that deal just led to another opportunity about a year and a half later. We got some other properties in Arkansas, and the whole time I was networking with people. At the time I was not active on any social media other than just on Bigger Pockets. So I just I'd listen to podcasts as guests would be on there, and then I'd reach out to them afterwards and say, hey, I enjoyed your interview. I'd like to talk to you more about this or that, and started kind of building up this network of people that were in that space. And learning from them, getting on different lists from wholesalers and brokers and people just to have that network built in. So eventually got to the point where I was able to start putting some deals together just based off of I was continuing to learn myself, get educated, reading books and listening to these podcasts, so I could over time more or less quote unquote become like an expert, and find someone else that has the money to do a deal, and we could start putting some deals together, and that's just kind of where it started just growing from there. But I from the start, I was probably too scared, or also didn't have enough money to invest in the syndication deal at the time, or at least I didn't think about. I probably would not have done it at the time either. I would have considered that too risky to take my money from 401k and trust it to somebody else. But now it's of course different story as I've learned and grown over time. But yeah, for me that's pretty much how I got started. It was just I would have never imagined at the time I would be doing kind of the things I'm doing now 4 years later. But it's just like you said, you get started and things just start happening. It just grows and it continues to snowball and become, something that's life-changing.
Well, and I want to touch on two things that you really mentioned, and I love that you mentioned that, because the first one is education. You can't get into this without educating yourself. You either have to lean on other people's education at first, but it's just so much better to just go ahead and educate yourself. And so you can do that through the podcast and stuff. That's what I did. I mean, I had extra time and I would listen to podcasts about real estate, and Bigger Pockets was a big one. And then I started listening to, I pivoted from the standard kind of real estate that they're talking about, a lot of single family, BRRRR method, things like that. And I got away from that and started leaning towards the apartments, because it made more sense for what I wanted my lifestyle to be.
Right.
So you can be as active or passive in this business as you want to be. But that's something, when you're getting into this stuff, it kind of helps to know yourself a little bit. And so, you can know, I mean, Don has been doing this for 4 years now. It took a long time to build the knowledge that he's built and to get the experiences that he's gotten. But then again, 4 years goes by in the blink of an eye.
Yeah.
And so
yeah. And I know plenty of people that, in the same time frame or even less, have scaled much, much faster and done a lot more than I have, so, I mean, it's all, let's say a lot depends on, of course, your personal financial situation, of course, what you can get into, and then, your connections with other people. And like you said, your drive and motivation to make things happen. There's some people that, they could have started with zero money and gotten into, thousands of dollars without any of their own money in the deal, just because they've had that drive and time and knowledge to get it all done and put together,
Yeah. So we have a couple new people in the room. We've got Angel Williams. And then we've got Jacob Faso. So if y'all want to just tell us a little bit about yourselves, and that way the folks can get to know you.
I'm Angel. I am the face of our educational platform. It is the Academy Presents Real Estate Investing Rocks. We have 2 3-day virtual summits every year. Our next one's coming up at the end of March. So we do a lot of education. We got a podcast, we have a meetup, we got a lot of stuff going on with that. And we actually just closed our first multifamily deal on December 17th through our investing arm, which is Lauren Capital. So fun stuff, lots of stuff going on.
Yeah.
And if I can interject, I think everybody else here, especially your newbies, I highly suggest going to Angel's summit. I went to hers like the year ago, the one in March. I was barely getting started with the whole multifamily, large syndication stuff, and I got invited to the Angel's meetup. I went there, and that was like, or not meetup, that seminar or whatever. And now I was just blown away. I felt like I was out of place, really. I mean, you hang around for the meetups after the presentations, and I was this nobody basically in this room of all these like highly skilled and masters of their craft, of people that raise hundreds of millions of dollars and have billions of assets under management, whatever. And I was like, I felt out of place, but it was just awesome to be in that room and learn from all those people. So definitely, I highly recommend anybody here to go to that.
So yeah, and definitely we have a chat box if people want to put information in that chat. that is fantastic. And that way people can reach out to you, get to know you. So Jacob, your turn, buddy.
Yeah. Yeah. I am an IT professional. So, but like 2 years ago, I moved to High Point. Then I didn't want to sell my house, try renting it out, and it looks like a good experience. So, and then I saw this meetup and I said, okay, maybe I can learn from people who've been doing this for a while. So I'm just new to it and I'm here to learn.
Yeah. Very cool, man. Good to have you.
Thank you very much.
So, yeah. So Angel just popped her information in the chat. And so, yeah, you've got some good stuff going on, Angel. Who are some of the speakers? I haven't looked at your speaker list. I know, you've got some doozies. I know it's still being formulated.
Yeah, it's still being worked on. Actually, Don's a speaker. He's over here being all shy, but Don's gonna talk about like the importance of networking and what that can do for you, because he's blown up on the scene. I mean, he's really taken this idea of networking and your network being your net worth like to the absolute extreme and doing amazing things with it. So, and I would just say like in the last year, like I've watched him do so much, like it's just amazing stuff. And the people that you have relationships with now that I've watched grow. And I mean, I remember, I remember what it was like a year ago, and it's just amazing to see what you're doing.
Yeah, thank you.
Yeah. And I mean, we've got other speakers too, but he's here. So.
Yeah, absolutely. Absolutely. So, all right. Well, yeah. So as far as getting started, Jacob, you mentioned you've got kind of a single family rental. Are you looking to get into some of the smaller multifamily, like 3-plexes, 4-plexes stuff? Or are you looking to like, hey, I want to invest in that high rise over there, Yeah.
So in the past year, actually, so I moved from Maine to here. So when I got here, I noticed that there were a lot of companies around. Actually, I rented for a company for a year before settling. And so it was quite interesting. So looking around, it was pretty clear that you probably could invest in, like be in real estate without actually owning a property. So that is one way that I know of. But if the idea too of this multi-family homes, and then being part of a project like that, that looks interesting to me.
Okay. Yeah, because there's there's a fair amount around us, with regards to some of the smaller multifamily and some different growth going on in different areas. Obviously High Point's one of those areas that's really primed for growth with the university there and everything there, and the new baseball stadium, all that kind of stuff. So lots going on down in High Point. So and this kind of goes back to that second point. You got your education on one hand, so you want to find good sources for your education, but you're going to have to do some networking. And so, specifically, if you're looking to get into your own area, you want to develop relationships with the brokers that are in that area. Whichever area. I mean, you could be out of state, and you need to develop relationships with those other folks. So, the brokers are going to get you access to those deals. And, obviously you can try, you can drive around looking for places, or you can go on some of the different websites out there and potentially find stuff. You can get the lists that will tell you, hey, these are the folks that have owned properties for longer than 5 years, or, different things like that, it depends on how much money you want to put into things, but, or how much time. But there are ways to get out there and kind of start getting those leads. What Don mentioned before, going through a lot of different deals, you want to have your own criteria, and you want to look at a lot of deals first before just diving into the first thing that you see, because you want to get that experience level up with seeing these things. Because when you start looking at things like an investment, you don't want to get personally tied to it. It's not like going out and buying, you know, like I'm going to go buy my house. You know, we're talking more about investments, and you need to have some numbers that you're sticking to.
Yeah, I think just to back that up a bit, it's for me, it was important to know and understand, because if you think about, like I said, my wife's a realtor. Most realtors have no idea about investment properties. You know, they'll list one and they'll say great investment, you know, high cash flow, whatever, but they have no idea. They're just basically on what the sellers tell them, or they're trying to sell a product. They don't really know any idea. So if you look at any listing of property, you know, you'll say, oh, this says great investment, great cash flow, so I'm going to trust that and buy it. And you make a huge mistake, because most likely it's going to be cash flow negative and be a loser. So you definitely need to know and understand the numbers involved, and you know, how to analyze it properly to know if it fits at least what you're looking for. You know, what everybody has their own individual unique criteria for what they'll accept for you know, returns and cash flows. But as long as you're comfortable with that, and you're familiar enough with it that you can feel comfortable with your analysis to make that decision, then go for it. But don't trust somebody else just to tell you it's a good deal.
Mm-hmm. Yeah, you have to kind of pour through the numbers to figure it out. And so that was always something that I had trouble with, because it always felt like, well, I can manipulate numbers. And I will say that my first single family, my first and I should say only single family home experience turned out like that. I wanted to buy a turnkey property. And so I went through a company, and this is a home I still own. It's in Center Point, Alabama. And you know, I bought this home as a turnkey. And, you know, which turnkey just means that you're supposed to, you know, it's supposed to be fixed up for you. Like a company buys this distressed property, they fix it up for you, and then they rent it out, and then you buy this rental property, essentially. And so, you know, the mistakes I made were I bought a property that wasn't as fixed up as I thought it was from the pictures. And then secondly, I didn't have a good property management team. You know, I was buying out of state, and so I needed to have a good property team. So, you know, that was, you know, that property ended up not getting rented for a while. Angel, I have to ask, you're folding sheets? Is that what it is? You're folding your laundry? Okay.
Yeah, I was like, is you're there fighting with the
in the chat. Yes, something like that. So we're talking about short-term rentals through arbitrage. Okay, so that's something that I actually had a podcast about that. I interviewed Al Williamson of leadinglandlord.com, and very knowledgeable. He is kind of, I mean, he geeks out on this stuff, man. He loves all of this kind of arbitrage stuff, and he's got close to 30 rentals on his own, and he's also he's a partner in several dozen more. So he's a guy who has a ton of experience, and I will find the link for that podcast and I'll put it in the chat. So,
my question about the arbitrage thing is, like, how do you get a landlord to agree to basically let you sublet on a weekly basis or even a 30-day basis? Because basically they contracted with you.
Mm-hmm. Mm-hmm.
So all the risk is on you. And are there insurances out there that will cover arbitrage STRs? Or do you just take on all the risk?
Good question. I've just from what I've researched in the past, as I've looked into that as well. Like you said, that's the biggest selling point, is get the landlord to agree to let you sublet it. But at that point, at least the thing I was on, they were going to do some training on it. Was basically you're guaranteeing the landlord you are taking on all the risk. If there's any repairs that needs to be done, you're going to do them. You're going to be upgrading their property for them. It's like, I might go and make it look nicer to get you those pictures. So I might add in the the digital thermostats and whatever else. So essentially, by the time you're done, they're getting a a nicer property back anyway than what they're giving to you. So as long as you can convince them to agree at all those terms, then people are doing it, I guess, But yeah.
I mean,
But
do you think you can
yeah.
get renter's insurance? Because you have to be honest.
yeah, I don't know. I'm not sure about how that works.
So Al had an answer for that, and I don't remember what it was. So, but yes, you are taking on more risk, but also less risk, because if it doesn't work out in a certain, spot, then you're not stuck in that spot. You can back out of it. And so, but the point of what he was doing was he was doing 30-day stays minimum, and so
some towns require that, right?
Yeah. Well, and so it's the extended stay rental model. And so, Barbara, you mentioned the healthcare personnel housing, travel nurse housing and stuff like that. Those are extended stay rentals. And so, he basically will go to a landlord and say, look, I'm going to take the best care of your property versus anybody else who you would have staying here, and I'm going to be renting it out to, nurses or whoever, you have in mind. But the idea being that an extended stay rental, if it's 30 days or more, then you're not running into any of the Airbnb laws, because you have plenty of apartments to do month-to-month rents. So now it's not an Airbnb, model per se. You also have less turnover. You don't have to have some of the crazy systems in place that you need to run a very successful, real vacation rental. But then the idea too is that you can also market to different populations, versus just the vacation crowd, where you have to have this immaculate place and it's got to have all the bells and whistles, and everything's got to be perfect because somebody's looking at this as a vacation, and they want everything to be perfect. Now you're talking about more corporate housing, workforce housing in that sense. People that are coming in to work on the interstate for the next year and a half. Well, they need a place to stay, but they don't want to have to, the job may not be as long as that. It may be, 3 months, it may be 4 months that they're there, and then they go back home for a little while and then they come back or whatever. But the point is that you can get these extended stays. You can get a premium for those extended stays. These are people that are just looking for a place to lay their head at the end of the day. So they don't need some of the bells and whistles that you would have in a standard vacation rental. But again, that being said, you're talking about different populations that you can target. So you can target healthcare professionals. If you live near a university, you can target traveling professors, or students at the university, that are there on a semester basis or whatever the case. You can do different things that make sense. So anything to add from anybody? Let me find the link for that.
Now so back in March of 2020, when I did my very first summit, I had Sarah Nicole on, and she was doing the short-term rentals through arbitrage. And I don't know where it ended up, because now they've decided to do a trucking company and they have a trucking school. And so they went a different direction totally. But yeah, they went totally different. I'm doing very well with the trucking company. But I don't know, it was always so weird to me for them. But she would say, you just go up to, even if it's an apartment complex, and you just make an agreement with the leasing office and the owners. And she did say sometimes they would do like a profit share to make it more appealing.
Yeah, and that was the other thing, is that you can offer them like, hey, I'll give you 20% of the profits, 20% of what you get on top, whatever the case.
Hey, Bobby, I'm interested also because, with our background, a lot of our cohorts in graduate studies have to travel out of state to get their clinical education requirements completed. So I'm interested in particular, the resident RNAs, nurse anesthesiologists, students that are having to travel out of state to, and they have no housing usually provided for them. So I'm interested in that as well.
Yeah. And that makes a lot of sense. The thing to keep in mind is, whether or not you're dealing with, I mean, I guess they're probably not going to have a stipend from the school. So you might want to figure out, it depends on your contact with the school that's sending those students that way. But, if you live near a program already or something, then that turns out to be I think a really good way to go.
So I have a question then. So a friend of mine who has a bunch of houses, like 4 and 5 bedroom houses in Denver, said she had one location where she did traveling nurses. But she said the biggest deal right now is that so many people have ESAs. So they're the emotional support animals. And when they come into like a house with 3, 4, 5 bedrooms, it doesn't work out because the animals may not get along. But even if you were in, because you can't deny an ESA. So if it's a short-term rental that you're arbitraging where pets aren't allowed and they've got an ESA that you cannot deny, I wonder how that works.
I don't know.
I would assume, my guess here, I have no idea, but being the case, it's a short-term rental, it's more like hospitality. So it's just like, hotels can say no pets. You can still say that's still pet, whatever, and no animals will, or no animals will say no pets. But I don't know.
Yeah, I don't know either. I just thought about it. I was like, that can make for a really not happy situation.
Yeah. And I don't know. I guess there are plenty of single folks who are in these CRNA programs to where that would be a legitimate concern for you, Barbara. So yeah, I don't know exactly what the approach would be for that.
Unless you maybe by putting it out here now, you can take it to somebody and say, hey, this is the issue I'm up against. This is potentially an issue I'd be up against. How can we handle it together?
Yeah.
Thank you.
Great idea, Angel.
It was more my friend that's like, she doesn't know what to do with these houses. I was like, have you thought about traveling nurses? And she says, well, in Denver, we have an issue because everybody brings their own little dog.
Yep.
That's kind of the culture in Denver. Everybody has their little dog. She's like, so yes, I've rented to traveling nurses, but it's generally not a good situation when I've got 4 different people, 5 different people living in one house with 4 or 5 different animals. So, and some of them aren't so little.
Yeah. Some of them are pretty big emotional support animals.
And some of them could not be dogs. I've heard people with support pigs and whatever else.
Ew. Maybe a little pot belly.
Yeah, pigs are smart, man. So, well, cool. So some of the reasons why I'd love to talk about some of the reasons why I like apartment investing in particular. One of the biggest things for me is that there's a set economy of scale that you already are dealing with. When you buy a short-term rental or you buy a single family home, you're basically, if there's somebody in that house, you're making money. If they're not, then you're not. And you have to start to scale before you see that really start to dissipate. You with a single family home, you really need to have at least 3 of them and have 2 of them rented out. And then you're at least making ends meet. You're not losing money in a particular month, but that's like the bare minimum. And you've got to have good numbers. You could have two of the places rented and still not be making enough to cover your debt service. So what I like about apartments is that the break-even points for them are about the same as with single-family homes. It's in the 65 to low 70% range, where you can have that much occupancy and still be able to cover your debt service. So what that means is you can have an apartment and, or an apartment complex, and it's 100 units. If you've got, 65 to 70 folks who are renting, then that means you can cover your bills, and that's what it comes down to. Anything over that, and you're making money. So for most apartments, you're looking at things that are in the 85 to 95% range occupancy. And so that's something that that these are these apartments that you invest in, you want to keep them highly occupied to make money, but you also have a buffer. If something starts to shift in the economy or whatever, local plant closes down, a lot of job losses, whatever, you've got a buffer there to protect your investment. Whereas again, with a single family rental, like if you don't rent it out, then you're not getting paid that month, and you still have to cover the mortgage, and it can start to add up pretty quickly. So, and I felt that pain personally. It's not fun. So that's the thing that I like about apartment investing, that sticks out. One of the things that sticks out to me. So, let's see, Barbara, you're in 5 syndications. What's your favorite part about it?
Just getting started. So got my Austin Mueller apartment syndication.
Yeah.
Got my first deposited back into my 401k last month. So got my first investment return. So that's exciting.
Yeah.
And you and I are in on the McAllen, Texas syndication. So it's just really exciting to actually start getting some money back pretty quickly, because that Austin deal closed in October, and by December got my first dividend check. So it's going to be exciting in probably 3 years with everything that I've signed up for this year. That's when I'll get super excited. But I'm also interested, Bobby, in doing more on my personal side rather than through my 401k. And I'd be interested in a lower price point, like at 25,000, even though I'm an accredited investor. In the passive market, because I sat down and I thought about it. It's like, I don't want to be a landlord.
You just ask for it. I'm dead serious. You say, hey, I'm accredited. I don't count against your 35, but I'm not comfortable coming in at 50. Can I come in at 25?
Oh, thank you.
They're going to say yes.
Thank you. Because I had an emergency surgery at the end of last year. So I've got some.
I didn't realize that.
Yeah, had my gallbladder out. So unreimbursed medical expenses are going to hit me the first month or the first quarter. So, but anyway, I'm interested in doing more on my personal side so I can do the Class B to get the cost segregation analysis and deductions on my tax reporting. So, and I'd be also interested in hearing who you use for accounting purposes and legal purposes, just to kind of get some more broad knowledge in those 2 particular areas.
What state are you in?
Florida.
So we're in Texas, and we use Dugan Kelly for our legal.
Okay.
he can be a little hard to get a hold of,
Okay.
but I'm thinking that he is also a part of what Dan Hanford is doing in Florida right now.
Okay.
And so I'm assuming he's more than one state. But as far as accountants go, I don't know. We use Christy Seipel, and she's in DFW, but I think accountants, well, Don, you can speak to that, Mr. Accountant.
Well, to be clear, I'm not an accountant.
Well, but you know accounting.
I work in
people.
accounting. I have an accounting degree, but I'm not an accountant.
Okay, so
bit of a distinction, but no,
you
I
know
mean,
people that can do that stuff.
I used a local CPA. I actually used to do my own taxes, forever. Since I started working when I was 14. I've been doing my taxes since I was 14 years old, and just last maybe 2 years ago started using a CPA because it started to get a bit too complicated. I was like, this takes so much time, and I was like, just let someone else do it. But I got a local guy. He's also an investor himself, so it makes it easy to, he knows what he's doing. But now there's a few national CPA firms that are specifically real estate only as their niche, that would of course be ones to possibly work with.
Yeah, who's the accountant? Tom Wheelwright for Rich Dad Poor Dad. You can actually call them and get someone from their firm.
Mm-hmm. Yeah,
they
have a website too. If you go to their website, I think you can do like a search or something. Mm-hmm. But I think you do have to like reach out to them, contact them before they'll start just handing you out.
Yeah, and I don't know for sure, but I'm assuming they're probably a little bit higher price than some others, but,
well, but
because of their experience, knowledge, right? Yeah. So.
Yeah, but you do get to deduct it. It's a deductible expense, so just kind of keep that one in mind.
Yeah.
Yeah. No, and that's the thing is, I mean, a good accountant and good attorneys can save you tens of thousands of dollars.
Yeah.
So. Yep. I think that's important. As far as me, I'm undergoing a change in accountants right now, so that's not going to help you, because I'm currently looking for my next accountant. So, but yeah.
Yeah, it's funny. My accountant was referred to me by my attorney. With my attorney looking at different things, and he's like, "Well, do you have an accountant you're using?" And I'm like, "No." He's like, "Well, here's a guy I could recommend you." I'm like, "All right,
yeah."
Cool.
Well, and those referrals are awesome too because they know each other's skill levels.
Yep.
So, does that answer your question, Barbara? Sort of.
Yes, it does. Thank you.
Like
it gives me a springboard to further educate myself. Because it's gonna probably in 2023 going to explode for me. So
yeah. Well, and it might come sooner than that because I'll tell you, I had two of them that went full term this fall, and that one of them was after 21 months and the other one was after 25 months.
Oh, wow.
And so both of those went full cycle, and I was able to 1031 those into the next investment. And that's kind of the key to keep the ball rolling. And then, yeah.
Was that out of your 401k?
No, those were actually I had taken that money out of my retirement accounts, but yeah, it was outside of that. So I 1031'd it outside of those accounts.
Okay. Cause, I need to get involved with a CPA that can help me with the, cause I don't think you have to 1031 within a 401k, but I'm not sure. So those are all questions I need to check with a CPA and attorney. But if it's 21 months, that's even better, because then I can just springboard into further.
Yeah. I mean, and it's a huge deal. It's automatically going to jump up my passive income per month pretty tremendously just with those two deals. So
that's fantastic. Yeah. And you've been doing this for how long, Bobby? I know that you and I just connected last year. So
I've been doing I've been investing in apartments for approximately 2.5 years now. So
that's fantastic.
And not all at once, obviously I had some other deal, like it was just seeing what deals came to me and stuff. So, but I did invest in several deals in my first year.
Yeah, well, it's been this past 9 months, I would say, because I think my first check out went to in September, because I was just looking at my flow sheets. For my first apartment syndication was in September, and that was for Mueller in Austin, and I've already started receiving dividends on that. So
Yeah. Cool.
So
That's good stuff.
So if I may ask a quick question, so for apartment investment, so is it like buying stocks in a company that invests in apartments, or
So it's not a REIT.
No. It's not a stock, but the idea is similar, where you are a passive investor. So, if you bought Amazon stock, you wouldn't expect to walk into the Amazon offices tomorrow and have a conversation with Jeff Bezos, right? Like, you can do that in apartment investing, luckily, but you're not going to come in and start calling the shots, right? So that's the difference is with an apartment syndication, you have a general partnership and a limited partnership. The general partnership is the operating team, the people that went and found the deal, analyzed it, got it, and they're implementing a business plan. And then you have your limited partners who are basically your investors, your passive investors. So they get distributions for, investing, and they get returns for investing, but they don't have a say in the actual business plan itself and how it's being carried out.
Okay, so all you do is put in the money and sit.
So yes, if you are a passive investor, that is exactly what you do. But the general partnership team is made up of different individuals. So you have people that will, they're kind of they go out and they find the deals. So they have all the relationships with the brokers and everything else. Then you have somebody who, will analyze the deals, that come across their desk and make sure that they can, budget for a business plan that makes sense and also make enough money for investors to be interested. So yeah, and that's true, Angel. If you're a passive investor, it is literally mailbox money that you get. I mean, that's what they talk about with single family real estate, but this is it's different because you don't have to deal with so many of the headaches of single family.
Yeah, no. So like we have a single family right now that the people that moved out, I guess they didn't realize their ceiling was turning brown from all of the roof leaks. But we are, even though we have a property manager, we're battling insurance to get a replacement. As an investor in a multifamily, I would never have to do any of that. I just look for the deposit every quarter in my account. That's it.
Yeah, I totally agree with you. So that's what I noticed with property managers.
Oh, did you freeze?
Care much about the property.
Oh, there we go. Yeah, and so that's where, like I said, you have your different team members, and so there are different ways to get involved with apartment investing. And it's not just as somebody who's coming to the table with a bunch of cash and says, "Here, put it to work for me." There are a lot of different ways to get in. So, if you're somebody who's in a good market and you want to develop those relationships with brokers, you can be the one who's bringing deals to the rest of your team. If you like getting in there and doing the nitty gritty of operations management, then you could be the asset manager potentially, and oversee the carrying out of that business plan. So there are several different ways to get involved in apartment investing. The biggest difference between single family and apartments is that it is a true team effort with apartments. You have to have team members that help you get to where you want to be. So
is the risk well distributed, or like could you have apartment in different markets, like packaged together? And I don't know.
So I'm not exactly sure what the question is. So
could
you clarify?
So if you if you go out and get deals, it means you're actually getting real property.
Mm-hmm.
And so, because if you have a property, let's say in High Point, the market in High Point isn't the same as, I don't know, the market in Tallahassee, for example,
Mm-hmm.
or the market in Portland, Maine. But is it possible to like package a number of apartments, like one in maybe High Point, another in Tallahassee, another in Portland, Maine, which gives you some sort of a combo if you are a passive investor that you invest in, or if you want to be active and get involved.
Yeah, so as a passive investor, for instance, I'm invested in at one point it was 6 different deals in 4 different states with 3 different operators. But I constructed that myself because that's how I felt I wanted to be diversified, was across the map, not just all in one location. So as a passive investor, I was able to invest individually in deals that did that. Now, you can also, if you're talking about, packaging things together, there are funds. The fund model is becoming very popular now as more money flows into the multifamily space. And so you can actually find funds as a passive investor that will be investing in different markets. So you, like, let's say you find a self-storage fund and it's investing in Texas and Florida and the Carolinas and Ohio, for self-storage, but you're getting all kinds of access to different markets and things like that. So that's kind of, I'm not sure if that's what you mean by that. Is that kind of what you were referring to?
Yeah, exactly.
Okay. Perfect. Well, guys, it is 9:00 and my voice is starting to give way. So
Sure.
I'm going to take a sip. But thank you, everybody, for being here. Any last questions? Oh, Avestor is a perfect example of that. Yes. I actually have a conversation with them about my potential Bitcoin mining fund, because I think it would be a fantastic option for that. So, but yeah, so yeah, if you go to avestor.com, they have different funds. You can get a hold of them and you're able to basically choose which investments you want. It's pretty neat what you're able to do. So that's one way to do it too, Jacob.
I think they're the only ones out there right now that are doing that too.
Yeah.
Or they're certainly the only ones I know about doing it.
Mm-hmm. For sure. So thank you guys, everybody, for being here. This has been wonderful. We'll do it again next month, and hope everybody got something out of it. And you guys have a wonderful month. Oh, you know what? Hey, I should put my contact info in there in the chat. How about that? So,
and there know those that don't know, if you're on your, at least you're on the computer, you can on the bottom right, the 3 little dots, you can click that and save the chat, and you can then save everybody's information, contact info, whatever, just to have your record of the chat.
Yep. The 3 little dots in that corner. I have saved a lot of chats.
Unless you're on an Apple. I don't know where it's at on Apple, but that's for
it's the same thing.
It's the same thing.
So long as you're on a computer, you can do that. But if you're on your phone, you can't. You have to find somebody that's on there that can send it to you.
Mm-hmm.
Yeah, that's correct. I'm on my phone, so.
Oh.
I will save the chat and I'll send it to you.
Okay,
if you'd like,
thanks,
Barbara.
Bobby.
Yeah, no
That'd
problem.
be great, Bobby.
Sending it to me too,
Yeah.
please.
So
Well, Lynn said she wanted it as well.
you do? Okay. I
Yeah,
don't,
thank you.
actually, if you would put your email in the chat, I can do that for you.
Okay, awesome. I will. And thank you all. This was, my very first time joining, but I definitely got a lot out of it, took some notes. And, as I mentioned, I have a lot of due diligence to do on my own, but it's been great. So thank you.
Excellent. And if you're looking to learn more about apartment investing, you can visit my YouTube page. If you look for On Call Capital on YouTube, that's me. And
I just subscribed.
Awesome. Perfect. You might have been number 100. I know I've been close. So
I think I'm 101 actually.
Oh, just missed it. So, okay. But yeah, Perfect. Well, guys, I'm going to save this chat right now. And that way I've got your email, Lynn, and I'll get this to you, and I'll get this to you, Barbara. And
Thank you.
so I hope you guys have a wonderful evening. It's been a pleasure having you. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.